But IRB Infra, that's the promised management. So welcome on board Anil Yadav, the Group CFO at IRB Infrastructure. He joins us on the sidelines of the Edelweiss conference. Anil, hi, good morning. Good to chat with you. Tell us a little bit about how FY19 is scaling up, and do you expect this to be a year of execution after some order backlogs that you saw earlier?
Yeah, in fact, our order book per se has increased from which used to 8,000 to 10,000 crores. That has increased to 15,000 crores. And considering this robust order book, we believe that execution for the next year will definitely increase, and the execution will increase in range of 20 to 25% as compared to this year.
Okay, so tell us about the building of a lofty backlog and the success of your new strategy to bid for hybrid national highway assets.
To a certain extent, yes. Last year, the mix of the order book, we have got roughly 5,500 crores from HAM and roughly 3,500 crores worth of BOT.
Okay, so tell us a little bit about IRB, which is now successfully transitioned from a vicious circle of a leveraged balance sheet into a virtuous one where it deleveraged the balance sheet going forward.
Yeah, we have basically transferred the 7 asset to the infrastructure trust. On that account, our capital got unlocked, and basically even the debt also on those SPV got repaid from the proceeds from the InvIT IPO. So now the 7 asset even with trust also are debt free. That debt also gone off our balance sheet, and plus also we have realized our equity, and that's why there is basically debt got reduced, and cash also came in the company.
Okay, so going forward then, what will happen to the expansion on the asset-light model which you've been following so far?
The main strategy to basically promote the infrastructure trust was that to basically unlock the capital. Normally we will bid for 4 to 5 assets in a year. We will try to sell 1 or 2 assets every year to the infrastructure trust, so that we can generate a growth capital by selling the asset to the trust. And normally if we talk about the BOT project, we will be bidding at 14 to 15% project IRR. We will be transferring close to 12% to the trust, and trust being a AAA rated, they will be borrowing at close to 8.75 to 9%, closer to that. So by that count also they will have a margin of 300 basis point on any acquisition.
Okay, in the fourth quarter though, you've doubled your backlog in just about a single quarter. Do you think this is pre-ordering just ahead of an election year, or would you attribute some other reason to this?
See, execution now order has been done. The execution will definitely start will not happen in first half of FY19, but definitely it will have impact. Basically, execution will start in second half of FY19.
Okay, so 2 things. A, that interest rates are going up, and that's going to definitely impact your IRR, I beg your pardon. And B, now when order inflows are so strong, so is competition getting aggressive? So how is it that you're going to address both these issues?
See, definitely now everybody has got a sufficient number of order, and as you rightly mentioned that now interest is also moving up, and plus we have challenges in terms of the funding of the loan from the PSU bank. Some of the PSU bank have clearly stated that they are not going to fund the new asset because of the some issues with them. So then definitely going forward also there will be some pressure on the interest, but as far as our company is concerned, normally interest rate is reset with 1 year lag or 2 year lag, and plus last year we had 3 asset getting operational. This year also we will have a 3 asset which will get operational. So post the project becomes operational, the interest rate automatically gets reset at lower end because construction risk is over. So normally 100 basis point delta is there. So on backdrop of this, basically we don't foresee that interest cost will go up. Definitely there will be some saving in the interest cost on backdrop of the project becoming operational. And further, the toll rates are also linked with the inflation. So then if inflation is high, then you tend to benefit on the tariff side of that. As far as HAM projects are concerned, those are linked with the inflation in terms of the construction, and their annuities are also linked with the bank rate plus 300 basis point. So automatically if there is an increase in the interest cost, then automatically your revenue will also improve.
Okay, most of the analysts believe that IRB's valuation is high and the kind of sensitivity it has to traffic growth, that's a little concerning. Could you tell us about the traffic growth that you're expecting?
See, in terms of the traffic, if you talk about the last year, in spite of the impact of the GST last year, still we have seen a healthy traffic growth of around 7 to 9% across the portfolio of IRB. And now the GST issues are already over. We believe that traffic growth should be anywhere above 6.5% in coming next 2 to 3 years.
Right. Infra now and Infra in 2008 was completely different. Have you seen more asset-light models, which means fall down in 2009, 2010 for asset-heavy companies will not happen?
See, definitely if you talk about a decade before also, that time also the government was, majority of the work was awarded on the EPC side only. But that time also there was some or other issues. As you rightly mentioned, in 2008 because of the asset heavyweight, there was some delays and some people have surrendered their project also. And basically if you believe the analyst or the banking community, almost 70 to 80 projects are up for the financial closure. Considering all the banks are not funding, then definitely we have to wait and watch out of the 80 projects how many projects are able to achieve the financial closure.
Okay, Mr. Yadav, we leave it at that. Thanks very much for taking out the time to speak with us this morning. Kunal, we are almost an hour into